Markets rose slightly today as we heard rumors of a new $2.4 trillion stimulus package being bandied about Washington. We also saw that the new home sales rose to their highest level in 14 years. However, it's not all roses. We did finish well off the highs of today's session, and in fact, the Russell 2000 ended today with an oversold cluster signal. So we'll take a look at all that, see if it affected our posture. Then we'll get into our trade application example, where I wanted to focus on a bullish technology swing trade to the upside. So with that, let's go ahead and get started. Welcome to the Market Outlook video presented by MarketScholars.com. I'm your host, Brandon Van Zee. It's September 24th, 2020. First of all, if you're new, welcome aboard. Remember to go on over to YouTube, click on subscribe on our channel, then go down to our description area and sign up for our email distribution list. That entitles you to not only receiving notification on whenever these videos are posted, but also gives you a heads up on what stocks in the S&P 500 are giving you overbought and oversold cluster signals. In addition to that, we're heavy users of Twitter. I'd encourage you to follow me. My handle is @BrandonVanZ, and also, we appreciate those of you that click like and retweet on these Market Outlook related tweets. And then lastly, we have a presence on Facebook as well. Feel free to join our group at that web address you see embedded in the logo in front of you. All right, let's go ahead and jump into our charts here. And as you can see, we've got chart 4B pulled up here in front of us to give us a nice bird's eye view of the four major U.S. equity indices. And we did have the S&P 500 up 0.30% today, the Dow Jones Industrial Average up 0.20% today. NASDAQ Composite was our leader today. It was up 0.37%, and then the Russell 2000 was the laggard. It was up, but just barely. It was up 0.02%. I guess I could start right there as well to just make sure I visually identify for you what I mentioned in the intro. The Russell 2000 was unique today in that we have an oversold cluster signal. Now notice that's our very first one that we have out of these four charts in the last 3 months. So as bad as the selling has felt by some of you in recent weeks, it hasn't gotten to extreme conditions up until what we've seen here just recently, at least according to the Russell 2000. Now, maybe it'd be helpful if we take a look at that by right-clicking and then going to maximize sell. So you can see that that cluster occurs when we've got the green line, the blue line, and the red line in the lower reversal zone all at the same time, and it plots that little green dot on the chart there for us, and then with the corresponding candle up here. And you can see, of course, we had an overbought cluster signal over here on September 2nd. So within just 1 month's time, we went from overbought to oversold in the small cap index here with the Russell 2000. Sometimes it's helpful to go back in time to try to get a sense of whether oversold cluster signals have led to an eventual bounce. And so I'm going to go back, instead of a 3-month chart here, let's go back on a 6-month chart. There I still don't see any of those green dots appearing except for today. So let's go back on a 1-year chart then. And in this case, you can see that we had some of those oversold cluster signals that started popping up during that coronavirus meltdown. Now, the problem with that, of course, is that we had 4 of them, so which one of those do you trust? The bottom one would have been a nice time to get into the market, but had you gotten into the market on the very first one, you're actually a little bit underwater, at least with the Russell 2000 here. Now, of course, the Russell 2000 has been a laggard, and I think your hit rate would have been a little bit better on the S&P 500 or the NASDAQ, but nonetheless, at least gives us some signification there of extreme selling in recent weeks and days, and we might be getting close to some sort of a shorter term bottom if the market has the appropriate news flow. We have to remember that there's a lot of uncertainty going into the market right now. Of course, we've got the stimulus package that I mentioned in the intro as one potential savior, but we still would end up having a market that is contending with what to do about the election. And of course, we're not going to get too political in a presentation like this, but there are certain sectors that might benefit, and there might be certain sectors that are at a disadvantage depending upon who's sitting in the White House early next year. So we'll keep our eye on that story. Right now it appears like it's going to be a pretty tight race, but for the most part, the markets have had a really strong run from their coronavirus lows, and we're just trying to grapple right now with where do we find a little bit of a near-term bottom. And right now, at least, we have one sign that perhaps a bottoming process is starting now that we've got one of those oversold cluster signals there on the Russell 2000. You can see the other charts got pretty close to those signals as well, where we've got the green lines in the lower reversal zone now on all of our charts. So that includes the Dow Jones Industrial Average. Yesterday, the Dow Jones Industrial Average green line was at 24. Today, it has fallen down into the lower reversal zone. It's at 17 at this point. So we do have strongly bearish postures on all four of these charts. Remember that background color being that darker shade of pink can signify that for us, but in addition to having the strongly bearish postures, they're all in the lower reversal zone at this point, which sets up the possibility of oversold cluster signals starting to hit on some of the other indices besides the Russell 2000 in coming trading sessions if weakness continues to prevail. So we'll have to see. Of course, tomorrow is Friday, and sometimes when we get a little bit skittish, we find that folks will sell their holdings into the weekend, not being willing to kind of hold through any news that might hit, and then kind of reload on Monday. So we'll see if that happens. Remember, this particular week is it tends to be a bit weaker and a little bit more bearish than most other weeks throughout the year. Some of you saw me tweeting about that last week. I was retweeting the Stock Almanac Trader guy, and he was reminding us that the week following September options expiration is traditionally one of the worst weeks of the whole year for stock trading, and so far it seems like this week has kind of lived up to its reputation. Today we did have bullishness across the board with finishing higher in each of those cases, but I think that that by the end of the day, it kind of left the bulls wanting more. As I kind of mentioned earlier, we did end up well off the highs in all of our charts cases. Notice that we have those long upper shadows signifying that we did not close near the highs of the session. So it kind of felt like there was a little bit of a rollover taking place at the end of the day, and that's not what you want to see. You want to see us strengthen into the end of the day, kind of showing that commitment level of traders willing to hold overnight, and it kind of gave us a sense that that just wasn't happening here today. So we're still fighting through this little slide that we've been on here. You can also see that all of our moving averages continue to be red, telling us that not only is price below the 30-day moving average, but those moving averages themselves are actually rolling over, and the path of the least resistance is now to the downside after, of course, having nothing but green moving averages for much of the last 3 months. So we definitely have a tone change within the markets here that we're all grappling with. Let's go ahead and take a look at our next chart setup. And in this case, we'll take a look at the 3 green arrows chart setup. And here, we still have 3 red arrows across the board. So S&P 500, Dow Jones Industrial Average, NASDAQ Composite, and Russell 2000 all have that pink background color signifying that all 3 of the technical indicators on this chart setup are bearish at this moment in time. I would point out that the Russell 2000 continues to weaken on its MACD histogram. Notice those bars continuing to get red, 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 versus over here we're seeing a little bit of a different view on the NASDAQ Composite. Here the deepest part of that momentum pullback really occurred here on either the 10th or the 11th of September, and then we've actually been rolling back towards the zero line on the MACD histogram ever since then. So perhaps we're going to get a little bit of stabilization there from kind of that work from home grouping that had been market leadership. Right now, it doesn't seem like it's the small caps that want to lead us. There's not really any area that truly wants to lead us, which is why we're seeing this selling pressure. But if there is going to be a leadership group emerging, it very well might end up being the NASDAQ composite, which once again was the leader today. But it looks like that momentum is starting to shift just slightly to get into more of a neutral ranking system as opposed to the true out-and-out bearishness that we saw a few weeks back. Let's go ahead and take a look at our longer-term view now, and this will be our 1040 crossover method. For those of you that are premium members, this is chart 4C, and a reminder that these charts are 3 years in length as opposed to the 3 months that we were just looking at a moment ago. Each one of these candles on these charts are 1 week. And as it stands right now, not a whole lot of anything new to report, which remember is oftentimes the case. This is not the most sensitive of systems. You're never going to sell the top or buy the bottom with this system. What you're trying to do is capture the trend in between. Sometimes that works, sometimes it doesn't. Right now, what I would point out is that we are having these red arrows appear above the recent charts telling us that the candles are now trading below the orange line, which in this case is the 10-week exponential moving average. Right now, we don't have any crossovers of the moving averages themselves, which is why the background colors remain green. So from a longer-term perspective, that bullish posture is still intact using this crossover method. But you can see it is the Russell 2000 that worries me the most. Those lines are pinching very, very quickly. And, you know, we could see within just a few weeks, if selling pressure continues, we could see a death cross here on the Russell 2000 where that 10-week moving average crosses down below the 40-week moving average. So those lines are pinching very, very tight there. Whereas we don't really have the same concerns with like the NASDAQ composite to the left. Notice how far away the orange line and the blue line are from one another as compared to what we see over here on the small cap Russell 2000 universe. All right, let's go ahead and pop on over to the internet here briefly. And if that'll pull up for me, hang on just a second. There we go. Wanted to say thank you to those of you that clicked like for me last time around. Boy, when I said my goal was 100 likes, I didn't know you guys were going to nail it exactly. So exactly 100 of you hit like for me the last time around. Remember, if you want me to do the full-length kind of 30-minute version of the video, go ahead and click like for me there on Twitter. As long as we're at 100 or more, like we were today, I'll go ahead and do that for you. Otherwise, for those of you that prefer the abbreviated version where maybe I don't do a trade application and we just cut it down to a 15-minute snippet, then do not hit Twitter. And if the likes are less than 100, then I'll just do a 15-minute version the next time around, which in this case, I'll be back with you guys on Tuesday. So leave that up to you, so that way you guys can kind of drive the content a little bit more. If you like the full-length version, hit like. If you don't like the full-length version, then don't hit like. But I appreciate those of you that do engage with us there on social media. Also, heads up that earlier today I did teach my question and answer session, and it ended up being 2 hours and 40 minutes. Normally they're only 2 hours, but today we had a couple of extra questions there at the end that I felt like it was important for us to address. And so if you're interested in hearing that commentary, remember that is now posted up here in the trading rooms area, and our Q&A sessions are the only class that we teach that is only for premium members. So the plus members get access to our 8 other trading rooms. The premium members get access to the 8 trading rooms plus the 2 question and answer sessions, one from me and one from David each week. So if you are a premium member, feel free to check out that content up there today. Also, David taught his portfolio management with ETFs class. So if you're interested in his take on different asset classes as we head towards the election, I would highly encourage you to check out that recording as well. And then tomorrow, David will be teaching his very popular technical analysis class at 1 p.m. Eastern time. So if you've ever wanted to get taught by a certified market technician, tomorrow is your opportunity, as it is every Friday with David, assuming that you are a plus or premium member of Market Scholars. And if you're not, we would encourage you to check out our offerings by clicking on the pricing tab up at the top of our website to learn more. Also, while we're over here on the internet, did want to check out our sector selector. Now remember, I put this together on the weekend, so this is a little bit stale here, but can give us at least a heads up as far as any movements we've been seeing from our overall rankings perspective. Staples had quite a big drop here week over week. I did notice that Costco came out with earnings after the bell tonight. It looks like they were drifting a little bit lower there, but that was maybe the one surprising element of the movements we saw. We did see technology move up one slot there, but at the same time we saw communications fall a slot. So, a lot of those communication stocks have been kind of trying to figure out which direction they want to go. Some of the video game companies have been struggling a little bit more, but we've seen some life come back into the social media names earlier this week as well. So I'll be very curious to see what happens with communication and technology as I redo these rankings this upcoming Friday as well. Let's go ahead and pop on over to the charts once again and do some 12 grid analysis now. And I'm going to come on over here to the chart 5A. So this will be our asset class 12 grid. And a reminder that on this particular chart setup and all the 12 grids chart setups, the background colors will signify whether we have a bullish posture or a bearish posture using the intermediate line on that market forecast technical indicator. So as you can see on this first set of 12 grids here, we have 3 green charts on the board. We have long-term U.S. Treasuries, we have foreign bonds, and we have U.S. dollar. Now, if you think about those particular asset classes, you're probably, understanding that this is not the most risk-on environment we've ever seen, right? And I think we kind of all know that by now. If we've been trading through recent sessions, risk appetite has weakened here in the month of September. And money is drifting away from the riskier asset classes into where it perceives some safety. And U.S. government bonds, foreign bonds, and the U.S. dollar from a currency perspective are kind of benefiting from that move towards safety. Now, when the U.S. dollar strengthens, as we've seen here, again, like I said on Tuesday when I was with you last, it's worth pointing out that the U.S. dollar not only has bottomed off of all of these oversold cluster signals over here, but we also now have a green moving average. So there's something cooking here with the U.S. dollar. It's actually firming up to the point where we could potentially be seeing a trend change on our hands right here. And remember, the U.S. dollar has reverberations across a lot of different asset classes, including commodities, which might be part of the reason why when we look at gold and oil, both of those charts are red. Remember that when the dollar is strong, commodities tend to be weak. You also tend to find that foreign assets become weaker as well, and that is the case with the foreign stocks from the developed perspective up here and the foreign stocks from the emerging markets perspective up here as well. Notice that both of those charts appear to be breaking support levels. In the case of the EEM, we had kind of a double bottom here on August 20th, and then again here on September 8th. We've now cleared that easily in the last 2 sessions to the downside, and that's been joined up now with a red moving average. In other words, path of least resistance could very well be to the downside now. So if we do get a quick little pop higher in EEM and those emerging market stocks, it might be a situation where you're looking to sell the rips. In other words, if we rip back up towards that moving average and it looks like it's going to use it as resistance, then maybe you're selling some bear call spreads, or you're buying some puts, or you're lightening up on your prior positions that you would have had in that particular area. And you are seeing the breakdown here in EFA as well. This is the developed foreign stock markets. And same thing, we didn't really have the same double bottom per se, but we did clear below this prior support level from the beginning of September. And you're also seeing here very clearly now that moving average is red and rolling over in a pretty big way there. It's actually a little bit more violent on EFA than it appears over here on EEM. So remember that US dollar, when it strengthens, might sound good to those of us in the United States thinking, boy, now we have more buying power. But of course, these days we can't travel overseas anyway, for the most part because of COVID. So remember that traditionally, if you are somebody who is cheering on higher stock prices, you actually probably prefer a weaker US dollar, and we're getting the opposite of that right now. So we kind of have to deal with those consequences. And of course, I mentioned earlier that the S&P 500 remains in bearish territory as well. And then also worth pointing out, real estate has really been whacked here recently. Now, it doesn't really bother me from this class's perspective or this presentation's perspective because we still have a couple of bearish trades going on REITs, including the office REIT that I bought puts on, and then we have a bear call spread on a cell phone tower REIT that's still working for us. So I don't necessarily mind to see the breakdown of REITs here, but I did want to point out that yesterday we received a oversold cluster signal. So it's possible that the biggest chunk of that bearish move from real estate has been realized here. So some of you might be looking to lighten up on your bearish trades within the REIT space and then looking to reload the gun if we get a little bit of a reversion to the mean move towards that downward trending moving average. If it looks like it's going to roll over there, then you can buy more puts or do more bearish things with the REITs there as well. Let's go ahead and take a look now at our sectors. And hang on just a second. There we go. U.S. sectors 12 grid. This will be chart 5C. Here it's a clean sweep for the bears. It was the same thing on Tuesday. On Tuesday we had a little bit of a better look because the two middle charts were a light color of pink, telling us that we had a weakly bearish posture. It wasn't yet strongly bearish. But today, even the industrials and the materials have relented, and all of our charts right now have a strongly bearish posture. Now, in some of the cases, the postures have gotten so bad that there might be the potential for a reversion to the mean. So let's kind of review those. And the financials are one of them. So notice that yesterday the financials ended with that green dot down there telling us we had an oversold cluster signal. We saw the same thing yesterday on energy. Of course, energy has had a lot of those green dots, and they really haven't amounted to much, so we've got to be careful there. But nonetheless, you can add energy in with financials as getting pretty oversold. You can also say the same thing with healthcare. Had that conversation today with some of our participants in my question and answer session today, saying that, yeah, I was recognizing that healthcare was getting bearish several weeks ago, which is why we did the bearish trades in this market outlook video on AbbVie and on CVS Health. There was just something that wasn't working with healthcare back over here, and it has really kind of proven itself out. But again, now that we're getting this oversold cluster signal and we're trying to find a bottom somewhere above where the bottom was back in late June, maybe a higher low is in the cards for healthcare. So we'll keep our eye on that situation. Of course, healthcare is one of those areas that does tend to get affected by expectations of who's in the White House. So we got to be careful there as well. And then also I will point out once again that real estate not only had a oversold cluster yesterday on XLRE, but it also got it again today. So a number of these areas have been roughed up so badly that you might actually be able to see, at least a short-term kind of dead cat bounce from those levels if the markets have the right kind of news cycle going forward. In terms of who did well today, we did see that technology was up 0.56% today. We did see that consumer staples were up 0.74% today. We also saw utilities up 1.12% today. So those were the three best performers from a sector perspective, with utilities being the only one that was up over 1% here today. On the downside, it looks like it might have been healthcare. Healthcare was down 0.5%. You also saw negative price action just barely in energy and also discretionary. So again, it was kind of a day that actually saw the bulls and bears kind of switch sides multiple times throughout the day if you were watching that activity. But I think it actually ended up with kind of an unsatisfied feeling at the end of the day, because I think the bulls were they're waiting for a robust update to kind of shake off some of this downward trend that we've been on for the last few weeks. And today had the promise of that at various times throughout the day. We just didn't finish strongly there, so that doesn't really give us a great sign kind of going into the end. I did want to point out from a foreign stock perspective, there were a couple of areas. Let's go over here to the global 12 grid now. This one will be 5E. This is the primary version. Brazil actually ended up having a pretty solid day. Not sure what was going on there, but Brazil was actually up 2.67% here today. So that was one area I did want to point out from a primary stock perspective that saw a little bit more bullishness today. Obviously, you're still in a downtrend there in Brazil, but at least there is some signs of life today. And then if we look at it from a secondary chart perspective. So this one will be global stocks secondary. This is 5G here. From this perspective, we saw Argentina kind of joining, its cousins there in South America, with Brazil and Argentina being, of course, great rivals on the soccer field as well. But anyway, Argentina was up 2.89% today. So a couple of areas getting a little bit of life to them there. Also, while we're over here, I think it probably stands out to you that Saudi Arabia is the only green chart on the board here. And it doesn't look half bad. It's almost surprising because oil and energy stocks in the United States haven't done very well at all. But Saudi Arabia, from a country perspective, has actually seen quite a nice upswing here. And of course, that economy is driven a lot by oil as well. So a little bit strange to see that taking place there. But if you are looking for strength from a global perspective, ticker symbol KSA, the Kingdom of Saudi Arabia, might be one of the few trenders that's on the board there. All right, let's get into our trade application example now. And for that, I'm going to come on over here to just do chart 4A. And the stock in question is Workday. And I already sent out the details of this trade. Remember, I try to do this the trades now when the stock market is open. And then I send out the details via our Telegram app to those of you that are premium members of Market Scholar. So it gives you a slight advantage there, I guess you could say, by learning the trade details during the market session, as opposed to those that are just watching the free YouTube version that will have to kind of consider the trade on an overnight basis. Anyway, Workday was kind of on my short list. My schedule got kind of twisted today because my Q&A session went so long. So I do apologize that this trade got in very, very close to the closing bell. But the reason that it was on my short list is I was actually looking at it on Tuesday. We ended up going a different direction on Tuesday. But on Tuesday, I had noticed kind of this really nice 1-2 punch right here. So this was Monday. This was Tuesday on Workday. And in particular, that Tuesday close was a really impressive one where we closed near the high of the session. You can see we went from being under the moving average to back being above the moving average. The moving average color changed from yellow to green. You can see that the background color changed from pink to green on that day as well, because that green intermediate line started to roll back higher. So those were all things that kind of caught my attention on that day. Now, yesterday, it sold off, just like the rest of the market. But today, it looked like it wanted to stabilize on that upward trending moving average again. Now, one of the things that I was looking at on Tuesday as to why this was catching my eye besides the bounce up was that we did have a bit of a what's known as a bullish near-term divergence. You can see that if you look at the blue line, so remember that's called the near-term line, and you kind of look at some of these lows over here, there was a couple different lows really right there on the 3rd of September, and then almost equal low in the blue line there on the 8th. And then you kind of compare it to where is its next low right here. You're going to see that they kind of diverge from the price action during that time. So as an example, here on September 8th, we're dealing with this candle right here. And then this next higher low on the blue line, the near-term line, is associated with this candle right here. So price action went from here to here, in other words, downwards, and then the indicator itself saw bullishness because it went up. So price went down, indicator went up. signifying some divergent activity in the indicator down below. You can see that workday, after having kind of sideways price action through much of the summer, really exploded higher after reporting its earnings in August, topped out way up here at 248, and then came down nearly as quickly as it went up. But what I like to see is the stabilization right there around that upward trending moving average. So you can kind of see where I've got my OCO bracket order established here. Again, I have the specific details in the Telegram for those of you that are premium members if you want to check that out. But basically, I've got my stop loss a couple pennies below the lows of these candles over here when it was below the moving average, and then we're going to shoot for an upside target around 220 or thereabouts, and kind of a one-for-one reward-risk relationship. So we'll see if the slight tick higher in technology on the sector selector that I showed you earlier can help support this particular technology / software stock. I know not all technology stocks are working anymore, but this one seems to still be giving us a glimmer of hope as it rides that upward trending moving average higher. So anyway, that's our trade application example here for tonight's video. If you got value out of that or any of the other analysis that I gave you along the way, whether that be strength in Saudi Arabia or maybe some of the information there on the US dollar and treasuries. Again, the way that you can say thank you to David and I is just simply take 5 seconds out of your day and click like for us there on Twitter. If we're up and over 100 again on Tuesday, give you that full-length video. If you would prefer the 15-minute version instead, then don't click like, and we'll go forward with that. Tomorrow, David should be back with you, and I will be working on the sector selector, so be on the lookout for that tomorrow night as well. Until next time, I want to wish you all the best of success with your trades and your investments. Goodbye for now.